Recording is Hi, let's get started. Maybe we can have the first team to go first.
Yeah, I'll just share my screen. Yeah, okay. So for the month of for the previous month, we are still holding on to our initial Google allocation of 10%. So today we'll be just covering the Google's recent earnings. Yeah, so as you can see, the financials were pretty bad. The only thing that was up year on year was actually revenue. So this was led by mainly driven by the cloud gains. And also services grew about 2% year on year. However, Google faced like quite a bit of margin compression. So the reasons that were highlighted by management were high capex, as well as continued employee headcount growth. Yeah. And then for Q4, the company is projecting also not a very good quarter. So company has mentioned about FX headwinds due to the strong US dollar. Also due to poor year-on-year growth figures due to high base effects during 2021, as well as an ongoing headwind from the slowdown in ad buyer spend. Yeah. But for our own company's take, for our own take is that we still view Google as a strong long-term durable compounder. It's still a strong business with growth drivers, and it's currently trading at a reasonable price. Yeah. So even though it's currently facing some short-term headwinds, we still continue to believe in the business, especially in the long-term growth. Yeah, so for that, we are just gonna stick to our current allocation of Google and possibly even buy even more if it continues to dip. Yeah, thanks.
Okay, anyone got any questions for group one? Okay, maybe I'll just ask one question then. Do you have like a target price on like when you intend to buy more, or like what price that it dips until that you'll be intending to buy more?
Probably around the $85 range lah. Yeah.
Okay, sure. Then could we have the next group, please?
Okay, sorry, wait, let me share my screen. Sorry, is my screen visible?
Yeah, it is.
Okay, thanks, Pauline. Okay, so this is Team Alice's portfolio update, and currently we're down by 54% because the current price of Meta is actually at 99.2 as of today. Yeah. So a general update is that actually the FTC is currently suing Meta because it's trying to block it from acquiring Within Unlimited. So it's actually a creator of a popular VR workout app, and they're actually accused of trying to illegally acquire Within because it's against like antitrust laws, because they're trying to accuse Meta of trying to buy its way to the top and trying to dominate the VR field without actually doing anything tangible about it. Yeah. So an implication of this is that the acquisition might not go through, and then there are potential fines and penalties that might be imposed on them as well. And then if you want to bring in the ESG factors actually for governance, because it's actually very costly for a setback for Meta, because ever since it started Metaverse, it has been trying to convince the public of its vision, but it has been very rocky for them. Yeah. And I think for governance wise, it's actually not a very clear direction as to where the company is heading. So I think a lot of investors are very apprehensive about further investing in Meta essentially. And then for financials wise, the VIT Labs VR and AR division has been losing more than ever before. So in just Q3, they've lost 3.7 billion. And the company's outgoing CFO has actually told investors that this will continue through 2023, and it can be expected that Meta's spending will continue into the near future. Yeah. So along with high operating costs, their capital spending has ballooned. So capex has rose 68% in the first 9 months of this year. Yeah, and then they've already lost about 10 billion in metaverse operations just in 9 months, and they don't intend to take their foot off in the accelerator, and instead they claim that the losses will increase significantly coming into 2023. So Wall Street's reaction to this is that they have actually slashed a quarter of Meta's stock price, in the space of one day. So I think potential picks for our group would be maybe Netflix, because there was a time where it was in a slump, but now you can see it's generally on the rise, because if you can see that in terms of the P&L, their revenue and operating income have slightly exceeded the forecast after the Q3's recent reportings. And then, I think all of you, if you have been on Netflix recently, you know about the Jeffrey Dahmer story, and then like Stranger Things coming out. And then these shows have actually boosted their revenue because more people are tuning into Netflix to watch these shows. I think especially for like things like Stranger Things. And then they actually have a new subscription plan coming up. So there'll be a lower price ad supported plan, and then but its existing plans remain ad free lah. But I think recently there's been talk that they will implement like plans that have advertisements, and so they're expecting more people to come on board Netflix with this lower price plan. And then so they have higher engagement than any other streamer, and competitors that potentially can compete with Netflix are also investing heavily to drive subscribers and engagement. But then I think that it can be said that they are actually operating losses more than Netflix. So as you can see at the figures, they are expected to lose about over 10 billion, while Netflix has only been earning at a 5 to 6 billion annual operating profit. So I think in terms of future outlook, I think the company is doing pretty decently. So that's it for my sharing.
Thank you so much, Grace. Anyone has any questions for group 2? So actually, Grace, from the sounds of it, you guys don't intend to sell Meta, right? But you're considering buying into Netflix.
I think, we can consider. I think we're considering buying into Netflix, but as for selling Meta, honestly, if we sell now, it's really a huge loss. As you can see, like 54%. But I think it's a very big hit or miss lah. But I think for now we'll still keep holding. We probably won't sell yet.
Okay.
Thanks, Pauline.
Then maybe to the next group, group 3.
Oh yeah, let me share. Okay. So this update for this month. Snapshot of our portfolio. So it's down 12%. Holdings wise, we added more shares into GDS holdings. It is currently trading at just below 10. Basically following the 20th National Party Congress in China. So there was a huge market overreaction to the Xi Jinping's address, and basically how he consolidated power amongst the senior management. As for Daco, they recently released their Q3 earnings. Fundamentally the businesses is going well. So revenue is matches last quarters, and there's still a very strong demand downstream for the solar modules, as well as a good pricing in terms of the solar module exports, and therefore has been able to prop up the polysilicon prices between $36 to $38. So that's resulted in quarterly revenue of 1.2 billion. But net income has taken a huge hit compared to the last quarter, and actually came under the consensus estimates mainly due to non-cash share-based compensation that was recognized this quarter due to a new SBC plan announced in late August, I think. But from the earnings call and the management's management's comments, it seems that this will only be a huge recognition for this quarter only. But even though the share incentive plan runs to 2025, they only expect to recognize about 7 million per month going forward. So there's about 21 million or so per quarter, which is dramatically lesser than what was recognized for this past quarter. And additionally, they confirm guidance for the full year. So they expect to produce 130,000 to 132,000 metric tons of polysilicon for this year. So basically that's the update. As for the market concerns, there have been some improvements. So the silicon powder price has continued to drop and has led to record gross margins for Daqo this quarter. Which has declined to, the cost of production has declined to $6.80 per kg of polysilicon. Secondly, like management is still in talks for dual listing in Hong Kong, and they say they'll release further details as the talks progress. And they've completed their share repurchase program. But this kind of offset, right, by the scale of the share-based compensation. But moving forward, they are still hopeful that the dividends obtained for the full year from their Xinjiang Daqo subsidiary listed in China, they will channel the dividends basically to more share repurchases for the next year. So I believe this will offset the total amount that was kind of diluted using the share incentive plan. So Adobe, the price has appreciated a bit after the overselling, right, when the Figma's acquisition was announced. I think our team believes that it will still continue to hold Adobe, because I think the acquisition of Figma helps to eliminate a potential disruptor, also helping Adobe build on their collaboration capabilities that they were developing in-house, but not too much success so far. As for GDS, I think because it's highly levered and it's currently unprofitable, it's taken a massive price pressure following the Party Congress, and so we decided to purchase more shares for the last week. And no material updates so far, but we'll take a look at the earnings in 2 weeks' time. And as for other updates, we're in the process of deploying about 2,000 into American Waterworks, and after which we will hold about 25% cash, right? And we'll continue to look out for other attractively priced, probably US stocks. We have enough Chinese exposure, and I guess the European markets aren't looking too good on the macro as well. So I think that's basically it for the update for us.
Any questions for our team? Okay, then maybe we'll move on to the last team. Team 4.
Yeah, I will share my screen. Can you see my screen? Okay. Okay, so on the portfolio, we are still holding on to Unity, which has dropped for a bit since our last check. So currently it's at paper loss is at 68%. The Q3 annual report, the Q3 quarter report will be out next week, in 1 week or two. So I think for now, in terms of fundamentals, we are still pretty positive about Unity. As we mentioned, I think repeatedly, our thesis on Unity was not based on metaverse. We believe that whether or not metaverse is an actual thing and succeed or not, Unity would still survive because of its real-time 3D kind of technologies, which can be used by other industries such as games, architecture, automotive. Yeah, so we are still holding on to Unity. Then the two other stocks that previously Troy and Shi Hui mentioned is ISR, Intuitive Surgical, and Daco. So for Daco, I think we are looking at buying it soon. Intuitive probably is gonna hold. They actually released the quarter earnings early this month, and then the price shot up. So we kind of missed the opportunity to buy at a low. So we're just gonna hold for Intuitive. So because there wasn't much in terms of news per se to update for Unity, and then I also don't want to go down where we keep analyzing new stocks before we even buy on the ones that we have analyzed. So today, I guess for our update, I was thinking I prepared something slightly different, which is to look at inflation and the Fed interest rate hikes. Yeah. So disclaimer, I'm not like an expert in terms of the economics of it, but this is more of me thinking through what it means when the Fed increase their interest rates and how that is supposed, or how that could affect the stock market. So open for discussion, just certain things that I found. I guess the first one is status check. We are at a high inflation sort of stage in global economy. For the US in September, it's 8.2%. Reference point last year, they were at 5.39%. The long-term average is 3.27%. So this is really considered high inflation. A couple of reasons why we are in this stage, right? There's the increase in household demand due to pandemic. So you have during the pandemic, people couldn't really spend, so you saved up. Now it's more of like there is revenge spending. So people have more disposable income to spend. And then that's, on the other hand, on the supply side, you have supply chain shortages due to the pandemic. Companies are struggling to keep up with the demand. So with high demand, lower supply, then you get higher prices. Then to make things worse, you have your Ukraine war. So that increases your energy prices. And then if you look around globally, beside not just US, but also Singapore, right? Our labor market is actually quite tight. That means our unemployment rate is relatively low at about 3 to 4%, which in usual circumstances, we would consider it as healthy. But then in today's like inflation kind of stage, the tight labor market contributes to increase in wage costs, which then increase the company's OPEX. So next Wednesday, 2nd November, it's sort of the world right now is waiting for the Fed to announce their interest rate hike. The economy's prediction is another 0.75% of increase. This would be the fourth time consecutively that they are increasing 0.75%, and that will bring the central bank's rates to 3.7% to 4%. After which, economies actually predict that they will start to slow down starting from December with 0.5%, and then hopefully by 2023, 0.25%. So I think right now it is between is the Fed's interfering too much such that it might trigger a global recession. But at the same time, because the Fed's priorities is always inflation, right? Even with the last 3 rate hikes, inflation is actually still high. If you look at what the index that they usually look at, your consumer price index, the reactions to the interest rate hikes is actually pretty slow, which is normal to some extent. Yeah, so I think that's a delicate balance that they are trying to balance between triggering like a global recession and trying to maintain inflation. So this was from September. when they increased it for the third time, and on that day itself, your stock market started crashing. So like I mentioned, the impact on the economy, it might take quite some time to see the widespread impact, mainly because both consumers and companies need time to react to the interest rates and make changes. But for the stock market, the impact is quite instant because investors just react to policies. So what higher interest rates mean is it tend to negatively affect earnings and stock prices, with the exception of certain sectors such as financial sector, which actually does better with higher interest rate. And then it also means that future discounted valuations are lower, since we usually use DCF. So with higher interest rate, your present value will be lower. So for investors who are more risk adverse, they might not want to buy stocks, especially growth stocks at this point in time. Yeah, so I was quite curious about, does it mean that the stock market will always crash when inflation rates go up? And then, so I was reading a couple of articles. So I think from a mid to long term, and so all these sort of conclusions are based on several articles that I've read that I sort of like compiled them, right? And then one, so based on historical data of the US Fed Fed's interest rate hikes, mid to long term, there is no correlation between rising rates and falling markets. Yeah, so if you look at this table, you'll realize that only the period between June 1999 to January 2001, the stock market sort of dropped because of the rate hike. For the rest, it's actually still green, even though in the short term, you'll see more you'll see more correlation, I guess, but the results are also mixed in the sense, from a statistical perspective, I don't think you can really say that there is an absolute like correlation between the stock market performance and when your inflation rise which triggered the interest rate hikes. So sort of bringing it back to what that could mean for us, other than the fact, I mean, this is assuming we don't go into global recession, but before that, Fed rate hikes might not like necessarily 100% be a bad thing. I think one, we need to recognize that it affects different industries and stock types differently. So for your financial sector, they tend to thrive in this kind of environment because that means higher margins for them. So if you guys have been following UOB, they did pretty well for these 2 months because of the higher interest rates. Growth stocks, such as tech stocks, they tend to be hurt with rising rates because one, your investors now prefer more stable stocks to counter the volatility in valuation. And two, your high growth companies usually reinvest cash into growing the business. So they spend a lot of cash. So when your interest rate increase, that means they are facing higher borrowing costs. And that could sort of slow down or even jeopardize their growth, which is now in the market, you would see that a lot of tech companies, they are being more prudent in how they spend cash. And they are trying to prove to investors that they can actually generate cash and go towards profitability. I guess all this kind of, to us as sort of investor or portfolio managers, it shows kind of the importance of diversified portfolio. And to some extent, I see it as this downtime, it could be an opportunity to tease out certain bad or just weak actors in the ecosystem that for the past few years really benefited from the crazy valuations globally, and then how investors were really willing to give chance to for especially like tech startups to burn through cash. But now they really have to prove that they have the capabilities. Yeah, so it's a bit harsh it's a tough time, I would say, but I don't think it's like 100% bad thing. Yeah, so that's all that I want to share. It's not a portfolio update per se, but I just thought it was interesting to share. Yeah.
Thank you so much, Jacqueline. I think this is very useful for everyone here. Thank you for sharing. Anyone has any questions for Team 4? Yeah. Okay, if that's the case, so for Team 4, you basically still deciding to hold on to Unity and then just finding a good time to buy into Daco, right? Because I think you mentioned that Trader Surgicals is still quite expensive.
Yes, that's right.
Okay, can. Thank you. Then I think that's all for today. It's a very short meeting. I think because also everyone has their finals coming up, so I can tell everyone is in a very anxious mood. So I shall not hold everyone back anymore. Thank you, and I'll be sending out the November schedule around next week. Bye-bye.
Thank you.